So is London's housing market going to crash in the next year? A lot of people have been calling for the government to raise the stress test or to raise interest rates as a matter of cooling Canada's overall housing market. I think I noted in a few videos ago that the representatives from BMO and Scotia have already said that we are indeed in a housing bubble and to expect the government to do something about it in the short to near term future. Indeed, as of February in Toronto, the average selling price for the first time ever topped $1 million. So all across Canada, we're seeing housing prices go up and up and up. And the question is whether or not the government's going to do something about it. London is case in point. In 2018, the average housing price was around $380,000. As of 2021, we're over $610K. So that's almost a 60% increase in 2.5 years. That's fairly substantial, unheard of in London. So, is the government going to intervene, and is it enough to cool London's housing prices? In 2017, the government intervened in Canada's overall housing market by introducing what's called the stress test. What that did was make it so that when you went to qualify for a mortgage, you had to prove that you could pay at least 2% over the contract rate, the amount that you were actually paying, or the rate set by the Bank of Canada. Right now that rate is 4.79. What that means is that although you might be paying around 1.8%, 1.9% for your current mortgage, you have to show the banks that you would be able to pay 4.79%. The government's idea with the stress test is that by adding in extra leeway just in case that rates do rise in the future, it will make it more expensive for home buyers today. And what that will do is make it more difficult for them to buy expensive homes, thereby bringing the price of homes down because there will be less buyers in the market for them. When the government introduced the stress test in 2017, it did slow down the housing market in places like Toronto and Vancouver and some of the more expensive areas of the country. But as we'll see, in London, prices still continue to rise up and up and up. We've all heard stories about Toronto buyers moving here and driving up the prices, but let's just look at it just in terms of interest rates to see where we started, where we are now, and where we're looking in the future, and in terms of affordability. We've all heard stories of Toronto buyers moving down to London and causing our prices to rise, but on its own, let's leave Toronto out of it. Let's pretend that Toronto buyers aren't coming down to London, and let's see what the data says. So in 2015, the average income in London was around $83,000, the average house price was $265,000, and the amount of money you needed to qualify for that $265,000 was an average household income of $55,000 per year. Again, that's with no debt. So as of 2015, pre-stress test, the average income in London was more than enough to buy the average house in London. In fact, you had about $30,000 in leeway to get you the average house price in London of $265K. By 2018, the stress test had been introduced. So you did have to qualify at least 2% over and above the contract rate or the Bank of Canada rate, whichever was highest. But the average income in London was about $96,000. And you only needed $80,000 household income in order to purchase that average house price of $380K. So we had the stress test introduced in 2017, which thought it would cool the housing market, but we see from 2015 to 2018, housing prices still had risen by over $120K. But still, in 2018, the average London buyer could still buy the average London house. In fact, they still had about $15,000 worth of leeway there in order to get that average house in London. By 2021, the government had lowered the stress test down to 4.79, down from 5.34 at its high in 2019. However, the average income in London is no longer enough to purchase the average house in London. Using a qualifying rate of 4.79, in order to buy the average house in London of $610K, you need an income of $120,000. So the average household income in London is $111K. versus 120K that is needed to buy the average house. So whereas we see since 2015, and even with the introduction of the stress test, where the average income could buy the average house, that's no longer the case. So if the average income in London can't buy the average house anymore, how much does it buy? The average income of $111,000, using the qualifying rate of 4.79, which is what it is right now, will buy you a $550,000 house in London. So you see there's about a $60,000 gap between what the average Londoner can purchase and how much houses are actually selling for. Why the difference? If the stress test goes back to its high in July 2019 when it was at 5.34, that will only lower the average Londoner's purchasing power down to 520K from 550K. So even if the government raises from 4.79 to 5.34, that's almost a 0.6% jump, it's not going to change the purchasing power of the average Londoner that much. Now, London's a special case because of our proximity to Toronto. When we're talking about London prices, we have to talk about rates and we have to talk about Toronto buyers coming down to London. By now, almost everybody's heard the stories of buyers from Toronto coming down to London, cash rich, after selling their houses in Toronto and competing with the London market, which are traditionally finance buyers. We saw the introduction of the stress test in 2017, and London's market just kept right on going. Now, we did have an excess of affordability in that we had some room to maneuver. But even after the average house price in London outstripped the average income in London, it has still continued to rise. So it's obviously not just lower interest rates which are causing the rise in house prices in London. There has to be some external element, and the only other element left is the buyers from Toronto. The buyers from Toronto aren't rate dependent, they're cash dependent, so they're not dealing in the same marketplace that we traditionally have been in London. They can pay cash for a house, they can go in without conditions. So they bring a lot more arms to the table, if you will, than the traditional London buyer does. So if the government raises the stress test rate or the qualifying standards, is that going to crash London's housing prices? Probably not, as long as we're lower prices than Toronto, then there's still going to be that draw for those buyers to come down here. Let's say, for the sake of argument, we take Toronto buyers out of the equation. So it's just London buyers, but we still have the average price of 610K. What's a crash look like? Even if they go up to the higher of the stress test at 5.34, we're still looking at an average price of 550K in London. The average affordability of a house is $550,000. So a crash from 610 down to 550, while it's not insignificant, it's still a 10% correction. We're not talking about going down to rates we're not talking about going down to house prices of 3, 4, and 5 years ago. And that's with taking Toronto buyers out of the equation. Unless Toronto experiences some odd crash where their prices are on the same level as London's, those buyers aren't going anywhere. They're going to keep on coming down to London, especially now with the work from home. So we can see, even with rates increasing and with the stress test being introduced, there was more than enough income in London to sustain the rapid increase in prices that it did. It didn't really come to the point where the average Londoner was affording the average price until very recently. I've talked to a few realtors over the past few years, and they've all said, and I agree, that London was devalued for years. And we can see that as far back as at least 2015, when there was lots of income left over after the affordability test was met, where the average income was 80K and you only needed 55K household income to purchase the average home. So we do see that undervaluing of London prices that was happening for years. So what does this all mean? Is there going to be a housing crash in London if the government intervenes in the stress test rate or in the housing market? Probably not. At least not a massive crash that some people have been commenting on and waiting for. The London housing market being devalued for years, finally catching up to what it was in other markets, combined with a rise in incomes, combined with buyers from Toronto coming down to London and not really having to worry about whether or not the rate is 4%, 5%, or 8% because they're paying cash, really doesn't change our housing market whatsoever. Even if we drop back down to where the average Londoner is buying the average house, that's still a $550,000 house, which isn't much of a correction. So again, as I always say, get your pre-approval in place. Make sure someone's looked over all of your documents, your T4s, your letters of employment, your tax returns, your pay stubs. And be ready to buy when you see the house that you like. If you like this video, please click like and subscribe, and we'll have further updates on the housing market, on the interest rates, affordability, and much more to come.